Okay, now come to the last part of the discussion of your December 2021 paper. Then this is the way I am going to discuss this. Now the 30 marks question on the section 2, question 3 on the pre-seen base, and in the unseen question calculation we have almost finished, done. Then this 20 marks I am focusing about first, and can you remember in the question 2 we have another part to discuss, which is in the writing part, which reference to tax administration and the case law provisions, plus the application of the deduction of the expenses, which is a lump sum payment. Then that all the writing part, that's mean this 10, 10, 20 and that rest of the 10 all together, since it's going in the same, in the nature, I have taken that part separately. All are in the writing part and with the explanation. Okay, clear? Then how, that's how the last discussion I'm going to conduct. Okay, then here it is, I'm starting from the question what we have just now discussed and done. Then in that part B, Roman 1 and Roman 2 I am taking now. In the part B, Roman 1, what is given? It has given the evaluation, it's given the evaluation of proposals. This is a normal question, this is a normal way of the question in the, if I have taken a previous paper, this kind of the question is there. Then the action verb is evaluate of proposals with what? With tax implications. Now this is the requirement. Now let me come to this question, and after that I will come to the rest of the part. Now you know what's the action verb, and this is the something proposals. Then proposal you have to evaluate how? With tax implications for the 7 marks. Then let me come to the the paper, and after, okay, this is the requirement in that question. Evaluate the 2 proposed investments. Now there are 2 proposed investments, then we have to evaluate that investments, evaluate 2 proposed investments in Sri Lanka. The both are in Sri Lanka, and the tax implications relating to both. The tax implication with reference to these 2 proposals, you have to tell both. Ekakin navattanda baha. Then you are expected to cover the following point. Now you can see lamai, the answer coverage has given. Your answer should be included these 2 things. That's why it's a 3 marks, 4 marks allocated. If you have write like that, then you are receiving this marks. What's the answer coverage? It's given under these 2 proposals, incentives available for a foreign investor. Very critical, foreign investor. When selecting a financing method, the 2 financing method, one is by financing by way of equity and or debt. And or kiyane mokadda? It's maybe the combination of the debt or equity, or else purely by way of the equity or purely by way of the debt. Okay, and any conditions or restrictions attached to each financing method, you have to select the financing method, you have to evaluate that, and you have to mention conditions, covenants, or whatever the limitations, restrictions attached to each financing method as provided in the IRA and its amendments. Now it's given incentives available, one thing, and for that particular restrictions on this. For 2 proposals you have to do this thing. Secondly, any income tax incentives. This for the way of financing. This is for way of financing. This is for after financing. Then income tax incentives on the proposed 2 investments. Do we have any income tax incentives? And not only that, it has given again a sub part, it is again and the income tax rates from this for the 4 marks, it has applicable, it's requesting 2 things. One is income tax incentives, second one is the particular income tax rates applicable for these proposals. Then this is on the requirement. Now for this requirement, let me come to the with this requirement, let me come to the information provided in the question. The information provided in the question. Okay, this is the part B. As stated in the common precinct, Stefan Johnson, the chairman of one of the key suppliers of the office equipment in USA, approached EOSL and indicated his willingness to acquire similar company through EOSL as what? As strategic alliance. As a strategic alliance in order to expand its global presence. This entire part, this has given in the precinct. Okay. Now don't forget who is this Stefan Johnson. He is a foreign investor. He is a foreign investor. Then foreign investor lamai, in our word, if I have taken who is this person, he is the non-resident. Non-resident individual. Non-resident individual. Now you need to look at all these things. One of the key points which you need to highlight from the reading of the question, who is this person? It's critical. That's why I am telling you should read the question very carefully to you to take the answer on that. Okay? Done. Then I am coming to the second paragraph. Due to the prevailing financial and operational difficulties faced by, which is the company, Innovative Office Solutions Private Limited, IOSL. This is the from the one of the brothers of this EOSL's the directors. Then there is a competitor for EOSL, which is from the Rehan Emerald. Then in that with the crisis and all that company has in the downturn, then for that company this Stefan Johnson is going to proceed to that company by way of the strategic alliance. Okay. Due to the prevailing financial and operational difficulties faced by Innovative Office Solution Private Limited, IOSL, and the request made by the Rehan Emerald, EOSL referred the proposal to exhibition of IOSL to Stefan. This is the situation. Now you can see the question. It has asked this whether this exhibition, how it goes to do, whether it's the by way of the debt financing, by way of the equity financing, or the cumulative or a summation or a combination of these two. Okay. Now come to the next one, which is Stefan is looking at the proposal made by the EOSL positively in addition to the proposed investment. Now there is another thing coming. Now this first paragraph and second paragraph is on the strategic alliance or exhibition. Now what's this? Stefan is looking at proposal made by EOSL positively. In addition, there is another proposal. In addition to the proposed investment in IOSL, he decided to evaluate the what? Possibility of incorporating a new company in Sri Lanka to build what? To build a plant for assembly, printing and other communication equipment for the export market. Very important. I am again telling, I am not looking much for answer, but I need to analyze the question and for you to provide the answer format. And you should need to read the question like this. The quality of the reading is essential. Then you can see from this, we have recognized this is non-resident individual, and we from reading the first and second paragraph we have identified this is a one option. This is a proposal 1. And third paragraph, there is a proposal 2. This reference to proposal 2. For you to write the answer, Lama, you need to identify these things. And finally, in here, the incorporating a new company, Mr. Stefan need what? To approach to the export market. Now you can see the selling, what's the now question, it has asked the income tax rate. Then that's why I am telling go to the requirement and after that come to the question. Then you know from the question what can I need to take for write my answer. I am especially talking about the answer writing. Then here it's export market. Then you know under first schedule in the subparagraph 4, in that subparagraph 2a, the tax rates given for the reduced tax rates given. The industry specified tax rate for the export market. For the export, then it's export of goods, then it has given as the 14%. Now, when reading the question, you can grab all these things. That's all for that. The expected investment for the project is US $12.5 million. Now in the question, it has asked about the incentives with the second part of the question with the tax rate. It has asked about the incentives. Now when looking at this is a new company by a person. It's going to do in Sri Lanka. It has given its in the question in the explanation it has given it's going to incorporate and everything in Sri Lanka, and then the investment on this new company 12.5 million. Then and the project implementation period is 18 months, and this the 12.5 million, this is what? This is a new investment, not the existing one. Then based on this investment, what are the incentives? We need to look at application of the second schedule and the sixth schedule. By reading the question, if you knew these things, if you understood these things, the answer is really easy. Answer is really easy, okay? Then this is the question. Then let me come to the requirement of the question. Let me clear all these, and let me come to the requirement of the question. Then I will come to the answer format on the Roman 1, bullet 1 and 2 covering this for the 7 marks, and after that I will come to the Roman 2. Okay, let me explain the answer. Okay, then here this is the question 3. In the question 3 part B, Roman 1 and it's only Roman 1, then it's Roman 1, which is the evaluation of the options. Options or rather proposals. Evaluations of the option or the proposals. What are the two proposals we have? The two proposals we have. The one proposal which we have is the acquire IOSL. Then the next one, which is the incorporate a new company. Incorporate new company. These are the two proposals. Okay. Then here, done. From this, I will come to one by one. In here, in the, this is strategic alliance and this is the incorporation of the new company. Now let me come to this one first because information loaded for this. Incorporation of the new company, in the incorporation of the new company lamai, we have, which is for the build a plant, this is for the purpose, build a plant for assembling, this is the principal business activity, assembling, printing or other communication. Other communication equipment. For what market? This is very, very important. For what market? The market is the export market. The market is export market. Export market. Therefore, when it comes to the, I'm first evaluating this, when it comes to the application of the tax rate, we can apply the 14% of the tax rate on this. And this on the, that details on the incorporation, and not only that, the second part of it, which I need to take for the second part of this one, which come to here, the investment. So one of the key thing which you need to address, the investment on this, which is the US dollars 12.5 million. US dollars 12.5 million. Okay, then these are the information of the one option. Now let me come to the next option. Let me come to next option, which is acquisition of IOSL. Okay, then here for all these things, Lamai, don't forget this all proposals, it's applicable to the non-resident person, a non-resident individual. Okay, now come to the second proposal, which it has given from here we need to look at the way of finance. It's asking, you can see it's incentives available foreign investor when selecting the financing method, which is equity or debt, and any conditions, restrictions like that. Okay, your answer should be cover these things. Then when it comes to the way of financing, we have two ways. One is the debt and other one is the equity. One is the debt, other one is the equity. Then for the way of financing, I am taking for these two from these two together. I am taking the first option, the way of financing, for both options, are not for only one thing. If not, you are thinking it's for only one thing, because with the space I need to arrange it. Then debt or equity, proposal 1 or proposal 2, the acquire IOSL or incorporate a company. From these two, debt or equity, the way of financing. Now come to here, it's very easy. Now come to here, if it is a debt, it's a the Mr. Stefan obtaining the debt and invest, and the as a loan, and as the equity he is going to invest. Now what's the you need to look at? By investing, so what he is receiving, the benefit you need to look at. The way of financing for the investor, I am looking for which angle am I? From the investor side. Then in here, the debt he is receiving the interest income. In for the equity, what he is receiving the dividend income. He is receiving the dividend income. Done. Then you need to look at the tax incentives relevant to this way of financing under these two options. For two options, incorporate a company and acquire the IOSL. Under these two things, if it is interest income, what are the incentives he has, and equity, what are the incentives he has. Then let me come to here under the interest income. Interest income by way of the debt financing for the non-resident person. Do we have the exemption? Yes, we have the exemption. But now for application of these incentives, application of this in the exemptions, you need to know, or you need to look at who is a recipient of this income. Then under the reading the question, you should need to identify this is non-resident person. Then interest income by receiving a loan, by giving a loan to the Sri Lanka, but particular non-resident individual is receiving the interest income. That interest income is exempted from the income tax. That interest income is exempted from the income tax. Then when it comes to interest income, you can, the non-resident, that the interest exemption can be taken, which is under third schedule. Non-resident person has provided loan to Sri Lanka or government of Sri Lanka, that interest income receiving from that, it is exempted to that non-resident individual or non-resident person. Then for dividend, what's the dividend exemption, Lamai? For dividend, again third schedule in the subparagraph double O, it has mentioned for the dividend income received to any non-resident person, it is exempted. Dividend income also, it is exempted. It is exempted with reference to non-resident person. Now, these are the incentives in by way of the debt or equity. Then under both manner, the benefit is exempted from the income tax. Under both manner, the benefit is exempted from the income tax. Then therefore, what we need to select now, 0. The impact is for both, impact is a 0. That means the same impact is there. Now what you are going to do? Then conclusion ekak denna bad. Then you need to go further. What you need to know? You have to apply what you all know. Now this is from the investor side. Now look at from the company side. Look at from the company side, my interest. Interest is what? This loan has given by Mr. Stefan. If it has financed through debt, then it's given for the production of income of the business. It's a loan by the main production of income of the company it has given. Then this is interest expense from the side of the company. Interest expense. Now what's the interest expense, Lamai? Interest expense is tax deductible. Interest expense is tax deductible. That's mean when it comes to accounting profit before tax, if it has in the section 12 requirement satisfied, if I have only taken that irrespective of the section 18 due to year of assessment 21-22 application, then tax deductible. Then by deducting that, this is a loan, it's not the small amount, it's a huge amount. That finance cost, deducting that, my PBT will reduce, and by way of that my tax liability will get reduced. Then the more or less the tax advantage is with the what in the by way of the debt financing is good. In the dividend, it's going through the changes in equity. Then for the income statement, the benefit is not receiving. Clear? Then this is on the debt and equity analysis, and you can recommend based on the sole factors which we can see the debt financing is good. Okay, for write this, your reading of the question and analysis of the facts is essential. Now the tax rate, let me finish off likewise. the tax rates. Then I have taken for this the tax rate which is the 14% for the new company which is export market under the first schedule subparagraph 4 subparagraph 2a. The rates are there with effective from 1st January 2020. Then let me come to the tax rate for this exhibition which is in the proposal 1. In the proposal 1, let me take the tax rate. The tax rate under the proposal 1, tax rate for the proposal 1 lamai, it's a IOSL, it is in the same business competitor to the EOSL, the distribution of the printing solution and providing of services. Then do they have, again it's a not a SME category, then therefore this normal, not the industry specified tax rate, then 24% you have to apply for this one. Now export and rate is here 24, in earlier 14, okay, done. Now in the requirement of the question, let me come to that. Incentive available for foreign investor, it's asking incentive available for foreign investor, then you need to look at who is the recipient side, and as the main shareholder or investor, we need to look at for the foreign investor, it's main shareholder, that's mean only 49% I think they can take. Then in that, the debt or equity financing arrangement we have looked into, what are the benefits to investor we have looked into, the restrictions we have looked into, then that part has completed. Now I am coming to here, the income tax incentives and the tax rates concluded. Let me come to the income tax incentives. Then after that, under the two proposals, the proposal 1 and proposal 2. Lamai, for the proposal 1, I don't see by investing that 12.5 million or whatever that amount, I don't see the incentive because the existing business. Then but for this one, for new company, for this new company, definitely there is a benefit. Why? This is the new investment. New investment in Sri Lanka, not the expansion of the existing business. For the investment in the invested in the depreciable asset. Depreciable assets other than the intangible assets, other than the intangible assets, then if so, we need to look at, okay, that part, it's a new investment, then that part we know. What's the next part? Based on the investment, which schedule, what's the enhanced capital allowance we are going to apply? It's a US dollar 12.5 million lamai. It's exceeding US dollar 3 million. Since it's exceeding the US dollar 3 million, exceeding US dollar 3 million, what is this? You have to apply the second schedule. Then under the second schedule, again under the investment incentives, you need to look at two things. Then it is it's starting from US dollar 3 million and up to US dollar 100 million. What is the enhanced capital allowance limit? 100%. But we need to look at whether its investment is done in a northern province or other than the northern province or other than northern province. Then you have to make assumption here whether it's a northern province or other than. Then if we take the other than northern province, then 100% of this incentive we can take only for the depreciable assets, only for the depreciable asset. Okay, this is on the this is on the entire discussion of the, I think it's a okay. Then this is on the entire discussion. For the first, for the two options, commonly I have evaluated debt and equity. It's for the two options, not for the only one. Two options, dividend and interest with the exemptions and all I have explained to you. And again, the tax rates taken separately, all information taken from the question. Then after that, for the new incorporation of new company, for that what are the incentives available in the act? In that the second schedule application with the assumption with the US dollar amount, whatever US dollar equivalent or US dollar amount, it's only the parameter. Any currency the investment can be done, the parameter is a US dollar. Then entire for the 7 marks you have to write this part. Then go through the suggested solution. The very good answer is there. Then what I have done, I have analyzed the question and the relevant parts, how you are going to write and how you are looking for the question, that angle only I have explained. Okay, because for your the paper, the same thing you have to do, read the question well, identify the requirements and address the requirement. In our thing, 3 requirements: debt or equity completed, income tax rates completed, tax incentives completed. Then looking at this, the good option is go for the proposal 2, which is incorporate a new company. Okay, then this is on that. Then let me come to the rest of the part of the question, which is completed. Second one, suggest the best possible option to avoid or minimize the cash outflow on VAT payments, which is input VAT, during the project implementation period of building of assembly plant by referring to the VAT. Now you can see it asking suggest, again the request in the course of action by yourself. Then your side, best possible option to what, Lamai? Avoid or minimize the cash outflow from what? VAT payments under input VAT during the project implementation period. Now can you remember in the question in here, it has given the project implemented period is expected to 18 months. There is a project implementation period of 18 months. Then with that, the question is, by referring to that, it is asking, due to project implementation period, on the building assembly plant, how the company, if they have gone for option, how the company is going to reduce the VAT, that outflow of the cash by way of the input VAT. Now please apply what you all know. It's for the 3 marks. Let me explain. Apply what you all know. Lamai, can you register for the value added tax if there is no taxable supply? Then it's a one question. Now currently we have forced registration as well as a voluntary registration. Other than that, for the long term projects, don't we have the special provision under the project? By looking at this word project implementation period, you should come to these things into your mind in section 22 subsection 7. The section 22(7) projects. In the value added tax, it has given to register for the VAT even there is no taxable supply. Lamai, without manufacturing or without constructing this assembly plant, the company cannot generate the revenue. Then the input VAT we are claiming on what basis? It should be directly attributable to what? To the taxable supply. Then therefore, in the taxable supply, then it is we currently right now we don't have the taxable supply. Therefore, in the law, in the section 22(7), it's very clearly provide a path. If there are long-term projects, then for that, under the project implementation period, not less than 30 months period given under section 22(7), then therefore, under that period, you can claim the input VAT with reference to the project expenses. Then it can be carried forward as the unabsorbed excess input VAT. and after that it shall be shown in the VAT return, and when the particular project is or company generating income, that particular input VAT can be claimed against the income from that particular project which you have carried forward the input VAT. That the project period, normally in the law it has given 30 months, in our case it's only 18 months. Then for sure we can apply. And lamai, there is a restriction. What is the restriction? The input VAT, that unabsorbed, that particular carried forward input VAT shall be applicable to the taxable supply. Taxable supply. Then tell me, in this plant, are we receiving a taxable supply, exempted supply or excluded supply? Lamai, we are receiving a taxable supply. Why I am telling we are receiving a taxable supply? What are we going to do from this plant? You can see it has given, it is for the assembly plant and other equipment for the export market. We are selling to the export market. Then please, we have applied it to the part 1. For part 2 also you have to apply the same thing. This is for the export market. Then the knowledge what you all know about the VAT you have to apply here. It is export market mean lamai, what is the taxable supply? It is the 0 rated. It's the export, the rate is 0. These are your known things you have to apply. 0 rate, now my question. 0 rate is a taxable supply or the exempted supply? Lama, it is taxable supply covering under section 7. Then the input VAT with reference to the 0 rated supplies or export supplies, can we claim or not? Definitely we can claim, and we have to request it by way of the refunds, and it's the mechanism. The under section 22 subsection 6 it has elaborated. Then from this, can we apply for the section 22(7)? My question, yes, we can apply. Why? In our case, this is it's given for the 30 months. In our case, it's a project implementation period 18 months, yes. Then the thirdly, it should be input VAT relevant to the taxable supply. Do we have taxable supply? Yes, it's an export 0 rate. It is taxable supply. And finally, yeah, that's all. Then after that, what's the other benefit? With the registering of the section 22(7), yes, we can claim the input VAT within the project implementation period. And also, if I am registered with section 22(7), I can register as the register identified purchaser. RIP in the SWAT, the gazette notification, it has provided who can register as the RIP. Then a person who registered under section 22(7) within the project implementation period, yes, then can register as the RIP. What's the important under the RIP? Under RIP, then they can purchase from the RIS, then no VAT implication again. There is a credit voucher. There is a credit voucher. Due to the credit voucher, then we don't have the VAT for the VAT payment is nothing there, even in the SWAT. Cash inflow or cash outflow with reference to VAT we don't have. Clear? Then can register as RIP. But even under this situation, if anyway the RIP has obtained purchase goods from the other than RIS, that input VAT they have to pay, and ultimately as a refund they can claim it. Okay. Now this is for this 3 marks. For this 3 marks part, which is suggest the best possible option. The best possible option is register under section 22(7). The eligibility criteria you need to look at. Project implementation period. Do we have taxable supply? And after registering under section 22(7), do we have another benefits? Yes, it's we can register under RIP and accept the suspended invoices under RIS, purchase from the RIS. Any input VAT paid we can claim. This is for the 3 marks. Then this is again analysis of the answer. I'm not going for the detailed answer. Please go to the suggested solution and please look at, I have done the elaboration and the explanation of the answer points and relevant provisions of the Act. Okay. Now this is the end of the discussion of this part B. For the 10 marks it has completed. Now let me come to this evaluation of proposals with tax implications completed. The suggestions on the best possible option on minimization of the VAT payment done. Now let me come to income tax administration with the transfer pricing and the transfer pricing penalties. Then for the 10 marks, let me come to that question. Then this is one of the question which you can take the maximum benefit out of your open book referential materials. If you know the things, then at the point of the examination, if you have not familiarized with these things, at the point of the exam you cannot look at these things. Then however, then you can go for these things. If you familiarize with these things, you can use the open book referential materials. Okay. Then what's the requirements for the how many marks? It purely for 10 marks. Under 3 bullets it has given. Now in the question record, it has given advise the board of directors of EOSL on the application of time bar provision, application of transfer pricing provision for EOSL, application of penalties for the failure to maintain and submit the required transfer pricing documents on the due date, and also for non-disclosure of information and concealment of particulars of income of the furnishing of inaccurate particulars. Now you can see your answer, it should be with the 3 headings. First one is asking application of advice. You have to advise to the company on the application of time bar provision. This is one heading. Second one, application of transfer pricing provisions. So something, application of transfer pricing provisions to EOSL. Can we apply transfer pricing? Are there transfer pricing issues in this organization? Then this is the second requirement, your second answer. Third one, this is talking about TP penalties. Transfer pricing penalties, even in this question, you can see it has given the what are the penalties under this situation. The situations given, you have to address the penal provision. Applicable penalties for the first one. Failure to maintain and submit the required transfer pricing documents on the due date. This is the first one. Make it a penalty. Second one, and is a second question is asking also for non-disclosure of information and concealment of the particulars of income or furnishing of inaccurate particulars, 2 or 3 these requirements. Now all these particular penal provision, maybe 2, maybe 3, you need to write what are the penalty provisions applicable. The particular subject matter has given, the topic has given, you have to write the penal provision. Done. Now for all these 3, for the 10 marks, with reference to provisions of the Inland Revenue Act number 24 of 2017 and the amendments. I think the requirement clear. Now let me come to the question. It's a very small part. or else let me clear this. Then come to the question. EOSL has filed the return of income for the year of assessment 2019-20. Now, is it for the year of assessment 2021? No, it has for the previous year, it's a 1920. With a slight delay and declared that the, now it's a one thing, a slight delay. And declared that the transfer pricing disclosure requirement was not applicable. You know, in the income tax return, in the last part of the income tax return, we have to put whether transfer pricing disclosure forms, which is TPDF, is it compulsory to file or not under section 77, under section 76, we need to write that particular requirement. If the aggregate value of the transactions are exceed that limit, we have to file the transfer pricing disclosure forms with the transfer pricing methods and mechanism. All these things is in the gazette notification, and practically we are doing the same thing. Then in here, and declared the transfer pricing disclosure requirement was not applicable to the company. That's why it's asking the application of the transfer pricing provision. Now the company EOSL telling, no, the transfer pricing provisions are not applicable for us, and as the required transfer pricing records were not maintained, that's why the penal provisions are asking. Then, however, the finance director of EOSL is aware that company transactions are carried at prime cost without adding a markup, and certain companies in the group enjoy tax holidays and reduce tax rates. Lama, you know the group structure of the company. The group structure, we have 100%, 100% and again 100% and again 80% subsidiaries. Then there are transactions in between associated person. Then even there are transactions in between associated person, do we have requirement to go for TP? No. We need to look at that three conditions. Whether one company is incurring losses, one company is taxed at the reduced tax rate, and one company is exempted. Now you can see it's as given. Enjoying the tax holidays, reduced tax rates. Then for second part, application of the transfer pricing provision for EOSL is applied or not? Definitely applicable. Then this is from the question, you have to take the information and the transfer pricing penalties. Okay. Now this is the question. Let me come to the first part, explanation, application of the time bar provision. Okay. Then let me come to the application of the time bar provision. This is question 3, in that it is part C. That's all in the tax administration part for the 10 marks. In here, first one I am taking the first bullet, which is application of the time bar provision. Application of time bar provision. Application of the time bar provision. What it has given, what's the application of the time bar provision? First let me come. What's the return filing due date? The return, the self-assessment, this is rather than answer, I need to go for a little explanation. What is a return? It's a self-assessment tax return. What is the time bar, what is the due date to file the return? It is the within 8 months from the end of the year of assessment. How 8 months comes is the end of the year of assessment 31st March, in our case 31st March 2022. Then it should be filed on or before 30th November 2022. Done. Now what has happened? This company EOSL has filed the 1920 return with the slight delay. This is talking about 1920. With the delay it has filed. Now how time bar provision applicable, Lamai? The time bar provision is applicable the 30 months 30 months from the date of the return file under section 135, 30 months from the date of the return filed. Date of the return file. Then if the EOSL, if the EOSL has filed the return in slight delay, is it applicable for this time bar provision? No. Anyway, the self-assessment tax return from the date of the return file, it will be counted the 30 months for the self-assessment or the amended or additional assessment. Then therefore, the time bar provision is 30 months, is asking application of time bar provision, the 30 months time bar provision is there. But if there are amended or additional assessment to this self-assessment, if the return has not accepted, then if there is additional or amended assessment to this filed, the return, then therefore we need to go for this is under section 135. For this we need to go for that application of the 1 year provision, the 1 year provision and the 4 year provision, 4 years provision, whichever is later. Whichever is later, then this is for the amended or additional assessment. Amended or additional assessment to self-assessment. Then whichever is later, then obviously 4 years provision is there, the later one is coming under the 4 years provision. Then this is the application of the time bar provision. The first one you need to identify for 30 months original time bar provision is not, it is no harm for that. Then after that, if there is we have filed the return, then for the self-assessment, that filed return, the assistant commissioner can issue a self-assessment within 30 months from the date of the return file. Done. That's the first thing. The first assessment, the self-assessment can be issued within 30 months of the return file. After that from the notice of that self-assessment, for the amended or additional assessment to the self-assessment can be made 1 year or 4 years after, from this whichever is later, the 1 year from the the notice of the assessment and the 4 years from the date of the return file, then whichever is later, it can be issued the assessment. Then the later provision is going, the 4 years provision is there. This is on the time bar provision. For the first part, application of the time bar provision we have completed. This is done. Application of the time bar provision. I am repeating tax administration or statutory provisions. This time bar provision, 4 types of the assessment, time bar provision, tax administrative review, that particular appeal procedures, please go through. Then penalties on this question as well as the question 2, penalty penal provisions were tested. Then whatever the things, it's a payment of the income tax by way of the quarterly installment payments, the advance income tax AIT, and on assessment, the penal provisions of that filing of the capital gain tax return due dates, please go through, plus case law provisions. Then I'm not telling go for these things and only refer these, but all you have to refer, we don't know where it can be tested. Okay, first part completed. Now application of transfer pricing provisions, let me explain in here. In the application of the transfer pricing provisions, we need to go for the gazette notification. Actually, in the gazette notification, let me take the gazette notification. Okay, let me come to the gazette notification. This is one of the important things, the 2217/7, by removing the earlier one. This was introduced. Now, in the act for the transfer pricing, let me again, rather than going for the answer, let me give a small description explanation on this. In the transfer pricing, you should need to have the knowledge of the section 76 and section 77, which is the domestic transfer pricing and the international transfer pricing, all the provisions in that, and the transfer pricing audit, the dispute resolution panel, and the particular definitions and all, plus the knowledge of this gazette notification. Okay, now in our question it asking, our question it asking here, which is the application of the transfer pricing provisions to EOSL. Now let me explain this. The application of the transfer pricing provision, I am taking the answer for this. This is the part 2, this is the part 2 of that 10 marks question, the application of the transfer pricing. Application of transfer pricing to EOSL. Okay, then here, first thing, to apply the transfer pricing, the first thing we have, you should need to identify there are two kinds of the transfer pricing. This is the format of the answer and elaboration I am giving. Then in the transfer pricing, we have two things. One is this covering under section 76 and covering under section 77. Section 77 for domestic transfer pricing, and second one, section 76, is the international transfer pricing. In our question, it's more or less looking for the domestic transfer pricing under section 77, international not much. No mentioning about, there is no mention about that. Okay, this is the first thing. Now the second step, you need to look at, okay, do we have associated person? These are the questions you should need to ask. Do we have associated persons? Associated person. Now my answer, what? It's yes, we have. Yes, we have. In the group structure we have seen there are 4 companies associated. Now done. The second question, these are the tests we have to do. In the second one, do we need to look at, do we have transactions? Do we have transactions? Do we have transactions in between this associated person? In between associated person. AP is for the associated person. Then in my question, in that it has given, however, finance director of EOSL is aware that intercompany transactions are carried at prime cost without adding markup. Now there are intercompany transactions. We know even being an intercompany, there are the 4 companies, the fully owned 3 and 80% owned 1. Clear? Then yes, for my answer here, do we have transactions in between associated person? My answer is yes, I have transactions in between associated person. Being a EOSL, we have the transactions in between associated person. Fine. Now, is it enough? Can't we have the transaction in between associated person? Even it leads to the TP issues, no? Then very importantly, in the fourth one, Lamai, you need to look at the position of the companies, position of associated persons. Associated persons in the regulation 1 of the transfer pricing gazette. In the regulation 1 of the transfer pricing gazette, there are 3 situations given. Transfer pricing regulations applies. The situation where TP regulations apply. What are those 3 situations? In that, the 4.1, one person, there are transactions in between associated person. In that one company, one person is making losses or brought forward, or else I will take this as the brought forward losses. The brought forward losses are there, and 4.2, which is that person, one is taxed at the higher rate, other is taxed at the reduced tax rate, and 4.3, it is for the application of the exemptions, maybe IRA, maybe BOI, application of exemptions. Lama, is this applicable for EOL? It's a company name also, forget out. Then for the equipped office solution, is it applicable? Yes, in the question paper it has given, which is the at a prime cost, and here company in the group enjoying the tax holidays and reduced tax rate. Then my application, then your answer, I am talking about your answer should be covered all these things. Then application of the exemption, all these three, yes. Then the fifth one, therefore, all these 1, 2, 3, 4. Therefore, what has happened? EOSL, what it asking in the question, application of transfer pricing provisions, then EOSL shall apply transfer pricing regulations shall apply transfer pricing regulation. The associated person is defined in the Gazette in the regulation 8. Regulation 8 is defining. Then in that, directly or indirectly, the ownership and control is there. Then therefore, EOSL shall apply the transfer pricing regulations properly. If not, what the consequence? Penal provision. Clear? This is on the answer format or answer for, this is for answer for the part or the bullet 2 of that question, application of the transfer pricing into EOSL. Now first I have applied the theory part. After that I have checked that theory part with the Gazette, application of the Gazette, not only the Act plus the Gazette I have applied. With the Gazette I have looked into, this is all from 2 to here, it's the application, and finally this 5, it's a recommend or a conclusion. Okay, this is the answer for the second bullet. And let me come to next one, the transfer pricing penalties. I am not going to discuss this. It's in the section 184 of the Act. Section 184 of the Act. The section, please go through this. Go through with the suggested solution. Then it is there. Please go through and look at what are the penal provisions applicable to transfer pricing. It's in the Gazette notification. It's in the section 184. Please go through. Since it is as it is in the book, I am not taking it again. Okay, then I think from this, the application of the time bar provision, application of the transfer pricing provision, and the penalty, this 10 marks question, it has concluded. Now let me come to this one, which is here. In here, now when taking the pre-scene based question, which is the 50 marks, the entire 50 marks I have completed, which is computation, proposal evaluation, possible minimization or avoidance of the VAT outflow done, and the tax administration part completed. Okay, then please, for the 50 marks, then you should have your overall knowledge. Therefore, the best practice is go to the past papers and practice. That's one of the key success factor for you to pass. Okay, let me wind up this, but not the end of the discussion. I need to come for what I have stopped in question 2, which I need to come to here. In the question 2, without taking time, let me come to here, which is on the part C. Roman 1 and Roman 2 I have not done in a tax administration and the case law, since it's linked to that, that's why I have taken it later. Then this is the part C in the question 2, writing part for the 10 marks. Then in that, analysis of deductibility of expenses when arriving into business income supported with case law provision. It's a part C, Roman 1 requirement, and part C, Roman 2 requirement. Again, you can see now that question on penal provision of the TP. This is on the penal, very easy question, penal provision on non-compliances with the payment of income tax and the filing of income tax return. Lamai, this all show this 4 marks. You can take it in the open book referential material. Use it, your open book, the referential material, that usage of it. If you are a good student who referred to those, then it's critically important. The testing of section 179 and section 178, and on the interest provision section 157 and 58, both for the 4 marks is one of the good question for your side. And again, this is the, you can see it's a 2 requirement, deductibility of expenses and the case law provisions. Let me come to the paper and we will come to this one. Okay, then let me come to the paper. In the paper, okay, this is the question. Question 2, I'm again coming to the section 1 part, which is here. Okay, the part 2 of this, analyze whether NPL, New Pack Lanka, then NPL can deduct the payment made to distributor in computing its taxable income. It's for the year of assessment 18-19 per the provisions of the Inland Revenue Act number 24 of 2017 and decided case laws. In that too, outline the statutory provision, which is penal provision. These are the 2 questions. Then this is analyze whether NPL can deduct the payment made to distributor. Is a payment when computing its taxable income for 18-19 per the provisions of IRA and decided case laws. Let me explain this first, then the requirement or the facts of the question. NPL has not made the quarterly installment payment, income tax payment for the year of assessment 18-19 by due dates and has not filed the return for the year of assessment 18-19 for this part for the Roman 2. Then let me come to next. Sorry, this is the facts I have taken starting from then, sorry. Then the C, during the same audit mentioned in above part B, that's mean for not allowing the input VAT to claim, then in that same audit in the year of assessment 18-19, the following points were identified by the Assistant Commissioner with respect to the year of assessment 2018-19. Then when it comes to 2018-19, we struggling these days because in 18-19 to the assessment, the last date is on 31st May, then there are interviews and there are written submissions and the assessments and lot of things are happening with reference to 1819 in this state. The same manner we also is struggling with the issues which we have with based on our filed income tax return. Okay. Then in that first one, NPL had made a special lump sum payment. What is the expenditure, Lamai? Now you know the requirement, it's looking for the expenditure for the distributor, whether it's allowable or disallowable. Then is a lump sum payment, a special lump sum payment, that's the expenditure. This is the expense we are talking for, whether deductible or non-deductible. To one of its distributor who resigned from the company. We are in the if I have taken the question in the new pack, it's a New Pack Lanka Limited is a company incorporated in Sri Lanka, engaged in business of manufacturing and selling. Then this is the business nature of the company. Then therefore there are distributors. Then that distributor has resigned. That has happened. Then after that, this payment was a covenant to restrict him from acting as the distributor for any other competitive business enterprise as NPL intended to protect its existing market share in Galle district where the said distributor carried out his business. What had happened? This plastic distribution, manufacturing and plastic distribution, for this distributor to prevent from not distributing any of the competitive products the price has or the lump sum payment has given. Now Lama, in here you should have to ask the question. The lump sum payment, given the reason you know, it's for the stop the distributing of the competitive product. For how many period? Is it given only for 1 year? Only for the 4 year, 5 year? No. This is the enduring benefit goes to, it seems to be, is a more than 12 months period by looking at this. Okay. The company and it's given market share in Galle to retain the market share. It's completely incurred for the production of income. But we need to look at whether this is capital nature or whether this is revenue nature. Then if it is capital nature, the enduring benefit it goes to more than 12 months period or not. Clear? Then the company has deducted this expense when computing the income tax liability for 1819. However, this deduction was disputed by the assistant commissioner. Now, what's the requirement, Lamai? The requirement is asking whether this deductible or not, you need to support it with the particular provisions of the case law. Now my question, how are we going to do this? First you need to look at the deduction criteria under IRA. What's the lump sum payment? What you need to look at whether this is covering under main deduction rule, section 11. Under the main deduction rule, what it has mentioned, any expenditure incurred for the production of income other than capital nature, can we deduct or not? Yes, we can deduct. Then is this expenditure incurred for the production of income? Yes, to secure all the market share in the Galle district. Then after that, is it capital nature or revenue nature? We need to evaluate. Then what's the case law provision? You all need to go. There is a same lump sum payment case law, which is the New Portman Company versus the Care. In the same thing, it's decided as the lump sum payment is a capital nature. Why? By even this question, by paying this lump sum payment, enduring benefit goes to more than 12 months period, then it is capital nature, therefore shall not be deductible. Come to the answer. I will explain this with the PPT explanation. Then come to here, which is, I need to come to here, which is the question 2C Roman 1. Then analysis of in the question 1, which is with the, sorry, it should be the question 2. In that C Roman 1, the action verb analyze, it's in the tier 4. You need to examine in details in order to determine the solutions or outcome. What the solution or outcome? That means you should need to provide the recommendation. What's the recommendation? The assistant commissioner's view is correct or incorrect. Then you have to justify it with your the provided in the scenario, that information, the application part. How to do the how to analyze 2 things given the coverage of the answer: provisions of the Inland Revenue Act, the provisions of the IRA and the case law. This should be covered in your answer. What is the year of assessment? 1819. Marks allocation 6 times 10.8. I am pretty sure within less time you can write this. If you all know these things, this kind of the things tested in the past papers. I am telling Patrice, the past papers is something essential. Coverage of the answers, application of the main deduction rule. What is the main deduction rule? The expenses incurred for the production of income. Incurred for the production of income, but other than capital nature. Other than capital nature. Then we need to analyze the nature. The 2 things, whether it's incurred for the production of income, yes, it to secure the market share, whether it's capital nature, we need to analyze. What is the expenditure? Is a lump sum payment to distribute to a distributor as a covenant to restrict him act as a distributor in future. From that also, it's for the production of income to make us safe. Then justification with application of the case law. What is that? Associated Portman Cement Manufacturing Limited versus Clay. The same fact is there. Then based on about 2, that's mean provision of the section 11 and the case law, the conclusion, deductible, not a capital nature, not deductible, capital nature. Then it is a capital nature expenditure because the enduring benefit goes to more than 12 months period. Then recommend that assistant commissioner opinion is correct or wrong. Then let me apply this in here. The assistant commissioner's opinion is correct. It is not deductible. It is capital nature. It's a lump sum. What's the reason? The enduring benefit of the expenditure goes to more than 12 months period. More than 12 months period. This is the answer, steps coverage of the answer and how are you going to finalize the answer. Okay. Then this is with reference to the case law provision and the deduction of the expenditure. Clear? This is on that. And let me come to the next very easy part, which is the penal provision applicable, which is the penal provisions applicable. Then we will come to penal provision applicable for 2 things. It's very clearly given. The 2 things, it is the not adhere to statutory provision relating to payment of income tax and filing of the income tax. Now here you can see it has given NPL has not made the quarterly installment payment, has not made the quarterly installment income tax payment for 1819 on or before the due dates and not file the return of income on or before the due date. If so, first thing you have to tell the NPL what are the due dates of the filing the return, what are the due dates of the quarterly installment payment. That's the first thing. Let me come to the explanation of the answer. Again, I'm taking in the answer format only. This is on the question 2 in that part C and in that Roman 2, in the part C Roman 2. I think it's a correct numbering. Yeah, okay. Then here what we need to do, first thing is the penal, I'm taking the penal provision, penal provisions for non-payment, it's a late payment of the, it is the late payment of the income tax, quarterly income tax. Late payment of the quarterly income tax. Okay. Then what are the correct due dates? This is year of assessment 2018, 2019. Then what are the due dates of payment of the quarterly installment payment? The first quarter, it should be due on, the first quarter is 1st April 2018 to ending with the 30th June 2018. This is the first quarter. Payment should be made on or before 15th August 2018. Then the second quarter, I am not taking this period now. The second quarter, it should be make the payment on or before 15th November 2018. Then in the third quarter, you have to make the payment on or before 15th February 2019, and you have to make the payment for final payment, which is for the fourth quarter on or before 15th May 2019 of the subsequent year of assessment. Subsequent year of assessment. Now, if a installment payer has not made like this, and not only that, it's a quarterly installment payment, and final income tax payment should be made on or before that's mean on or before 6 months after end of the year of assessment. Then 6 months counted with the year of assessment, ending of the 31st March, then it's 30th September in here 2019. Now, if you have not done so, Lamai, then what happened? You are subject to penal provisions. The penal provision on the non-payment, late payment, underpayment of the income tax. Then it has mentioned in the section 179. Section 179, and in the section 179 there is given not application of the penalty the 14 days from the due date. After 14 days the penalty is starting counting. For this, not only that, the penalty, we have the interest, not only penalty, we have the interest, both. Then interest is counting at the compounding at 1.5%. Then in that, interest is counting from the day 1 from the delay payment. Day 1 from the delay payment, it is counting. Then therefore in here you need to apply section 157, section 158 and the section 179. You should need to remember the 14 days for penalty will be accruing after the 14 days, and the penal provision, please look at the application, and after that if anyone has obtained the time extension to the payment under section 151, this penal provision not applicable for them. Okay, this is on the particular sections with reference to the penal provision. Please refer the suggested solution and take your answer. This is for the first part. And in the second part, which is the non-submission of the self-assessment tax return, or a late submission or non-submission or late submission it's in the question it's asking the payment delay in the not adhere, then I will take it's a same which is not adhere to, or a non-submission or a late submission of the income tax return, the self-assessment tax return, then again it's a consequence, again the penal provisions covering under section 178 penal provisions. Then in that, what's the due date of submitting? Please, when you are looking for the return filing, please know the due dates of the capital gain tax return. Please know the due dates of the statement of the estimated income tax return. Please know the due dates of the withholding, the annual statement of the withholding tax, annual statement of the APIT. Please know these things. Then the due date in the return section, as the return we are considering capital gain tax and the self-assessment tax return. Then due date, this should be filed on or before 8 months from the end of the year of assessment. Then our year of assessment 2018, 2019, Lamai, for this we have to file the return on or before the 30th November 2019. The 30th November 2019 we have to file the return. Okay, it's 18, yeah, it's 1819, then 30th November 2019 we have to file the return. Now, non-filing of the return, the penal provisions, please apply section 178, plus you have to write what is the maximum penalty. Maximum penalty, it should not be exceeds rupees 400,000. It should not be exceed rupees 400,000. Then you have to write all these things. Since the particular penal provisions I have not taken due to the it's in the book, please look at, but these things you have to cover in your answer. Then here for the non-payment, late payment and underpayment, it's a 58 or 59, it's a please look at that. Then in the non-payment, late payment, underpayment penalties, 14 days exclusion, you need to highlight the penalty, how it's a 10%, it's starting how the quarterly installment payment separate penalty under section 179. Again for the on assessment, that's mean final payment, there is a separate penalty. Please go through these areas, and that's all on this question, which is for the 10 marks with reference to the penal provision and the case law application on the can we deduct the lump sum payment. This is the question 2, that second part, part C also I have completed. Then the entire paper discussion is completed here with. Now let me come to this one, which is I need to go for the analysis of the paper. Now you can see the part 1, it's a 15 marks for the non-resident and international taxation. We have completed that, and it's for the permanent establishment definition and all. Second one, which is on the business decision making and investment income with reference to the individual resident. And question 2, first part for the, it is for 15 marks for the VAT, and for the next 2 for the statutory provisions and the case law with linking with the deduction rules. Question 3 based on the computation 30 marks, and the taxation and business decision making evaluating of the proposals and the statutory provisions. Okay, then for this paper all the explanation provided, as much as what I can do with referring to the changes to 21-22, which is your testable year of assessment. That part with reference to calculation and communications I have given to you. And finally, for please now in the in the section 15A, which is marketing and communication expenses, there is a new gazette notification. Please go through that. Please refer section 15A. These are new things, and the repair and improvement, that change I have explained to you. And the income tax exemptions, please go through these things. And entire syllabus, however, with reference to the 21-22, please go through your if you all please refer to your study text, the supplementary to the study text. Please take the advantage of the open book referential material, your Inland Revenue Act amendment, VAT Act with the amendments, and gazette notification. Please buy these things. And with reference to the value added tax, the new amended act, it was effected from it's a 1st April 2022, but there are provisions with taken into the with effective from maybe from the 1st January, like in the VAT on financial service rate is 18% with effective from 1st Jan 2022. Then for these things, please aware on these things. Then please go through entire syllabus. Then this is end of the discussion of the December 2021 paper SL3. This is a prerequisite for you to have a pass your the July 2022 paper. That's all. Then Patrice all pass papers with this, and it's a good opportunity for you all, and wish all the very best for your examination. Thank you.